What's up, everyone? Welcome to the Daily Macro Update for Tuesday, August 12th. We have CPI day today with a little bit of a mixed reaction. Not really, though. Pretty much better than expected because the market only looks at headline inflation, but it was also because of some of the what am I trying to say? Implications that what the inflation was actually being contributed towards. Not so much tariffs, but we'll get into that here in a second. So I just want to welcome everyone to the live stream here today. For those who are new to the live streams, we go live every single weekday except for Friday, so Monday through Thursday at 3:45 p.m. until about 4:15, 4:10 p.m. just to catch the close and to go over some of my thoughts here that are also being relayed from my team. It's not just myself doing this. I have a few other people who are helping me. So I'm just the mouthpiece really for my team. All right, so headline inflation remains steady at 2.7% as core inflation, which is the inflation rate minus some of the more volatile components like food and energy. That actually accelerated to 3.1%, which was in line from what we were talking about yesterday, with this being a better than expected inflation report. But we now have inflation continuing to reaccelerate into next month. So we'll see how long this lasts. The market is pretty much celebrating that tariffs aren't the issue causing inflation, which really wasn't the issue. I mean, we've been talking about on this channel for a few weeks now how services prices continues to go up while demand continues to go down, surprisingly. So there's a huge stagflationary type of environment that's going on right now. But let's go ahead and get into it here. Core inflation, highest in 5 months. We also had small business sentiment also increase, right? So that was definitely a positive outlook there. But taking a look at inflation here, as we can see, that remains steady at 2.7%. What I want to remind people is that the Fed still didn't cut rates, as inflation was dropping down, mainly because of tariff concerns. But if those are being more so subdued, we'll see what the Fed will say if they give up on their 2% inflation target or not. Core inflation, like we mentioned, remains elevated. It did have a 2-month acceleration here from 2.8% in May to 2.9% in June, and now 3.1%. It's back above 3 officially. This was in line with the Cleveland Fed's inflation nowcast from yesterday. They actually came in a little bit below for core CPI, but headline CPI, they were right on the money there. And so what's interesting is that, what some people have correctly pointed out is that the majority of the inflation was from services pricing. It wasn't necessarily, goods inflation, right? So things like medical care, airlines, recreation, household furnishing, used cars and trucks. Those were the main contributors to this higher inflation, as well as you also saw that drop in oil prices back in July. And so that also contributed to dragging it down. And so, we continue to see oil prices come down. So maybe that will be a positive for inflation to remain where it's at. But unfortunately, with core inflation, we could continue to see this divergence between headline and core if services inflation remains accelerated here. Taking a look at the trimmed mean CPI, which a lot of economists prefer. I don't know if you ever heard about this 16% trimmed mean CPI, but some economists say that this is more of an accurate representation of actual inflation growth. And yeah, that's been at 3%. Pretty much so far in 2025, and then this just accelerated to 3.2%. Pre-pandemic, the average was around 2%, right? So for some people who say like, hey, 2% inflation, that's a made-up number. Yes, it is, but also as well, looks like the camera went a little blurry there. But also as well, You have just recent history where 2% inflation has been something that has kept the markets stable, which is why they look at 2% as a historical backdrop there. But yeah, so services inflation ticked up and remains at 3.8%, unchanged from June, and it's still above the pre-pandemic average, which was around 2.8% slash. This was decelerating in 2020, so yeah, pre-pandemic average was around like 2.6, 2.7. Still way far away from that in terms of services inflation. So there still needs to be a lot of work done on services inflation, which we're not seeing just yet. Rent inflation continues to come down. Food inflation had a little bit of a tick down, but still remains, a little bit elevated there. And then, as we talked about beforehand, medical care has really exploded over the past couple months. That's been a main contributor. Housing, not as much. Let's see. Durable goods, interestingly, are continuing higher and are now back into positive territory. This was the first time since, when was this? November of 2022. So durable goods inflation continues to actually accelerate higher, as well as used cars and trucks. And I think that's the main point here. Taking a look at the target rate probabilities for the Fed meeting in September, this actually accelerated from 86% yesterday to a 94.4% chance of a 25 basis point cut in September. This rose because of inflation remaining at 2.7% for headline, and the main contributors not being tariff related. And so, during the last couple of Fed meetings, as well as appearances, TV appearances by Jerome Powell, the Fed chair, he has repeatedly said, like, hey, we're going to keep rates higher because we are uncertain about tariff inflation. And with this report here, which was really the first official report that included some tariff numbers, that proved not to be the case. And so the market is celebrating that. And this also happens at the same time where you also have Trump re-extending the 90-day tariff pause with China, which the market is also seeing as something that it is celebrating. And so we have about 7 or 6 minutes left here before the market closes. New all-time highs for the S&P 500 with authority right now. The SPY up 105 basis points on the day. That is a pretty large move. And yeah, interestingly as well, I mean, you have the 30-year U.S. government bond yield also having a bit of a pop. So, I mean, yeah, we'll see what happens from here. Treasury bills, the 13-week Treasury bill, it's still, at the low end of the range here. It hasn't officially sunken down to 40, which would definitely be a key indicator to watch with Fed cuts in September. Again, there's still a lot of data that could come out. It doesn't matter either way, though. I mean, whatever happens, happens. Our team and I still remain bullish on the S&P 500. The bookshelf in the background remains green there, as it has been since May 13th. And so there's really no reason to panic right now. I know that there's some people who have reached out to me, really just unsure what they need to do. If you're unsure on what to do in this environment, it might be because A, you're just winging it in terms of having an investment strategy, or so at the same time, or just by itself, you're letting the news influence you too much. So you're looking at too many headlines, or you're reading, or you're watching too much mainstream news, and really you just need to follow the trends, right? The trend is your friend until it's not, but the trend remains the trend, which is bullish, and so it remains our friend. And so, yeah, that could continue well into 2026. Who knows? The point is not to try and time the markets and wonder when this all ends. The point is that you want to remain playing the game until the game ends, right? It's a game of musical chairs, and you win by playing. So, yeah, for those who are fearful about being in the markets, I highly recommend that you actually learn an investment process. If you guys need help with that in the context of macroeconomics, I would highly recommend going to our website, macro-optics.com, where we have some free resources for you to get started. Okay. Interestingly, taking a look at the VIX versus 3-month VIX ratio, this is at 0.8. The team and I like to use this ratio here to get the volatility markets outlook for when things are a little bit overly bullish or overly bearish, typically around zero point 0.8. That is when the market is a little bit overly bullish and a great time to take some profits. And conversely, at around 1.0, that ratio is a good time to start to look for opportunities at the low end of the trading range in bullish trends. And so as of right now, we've been taking a bunch of profits on a lot of names that were up, that are doing pretty well, I might say. And so, yeah, it's been a great couple weeks in the market. I don't know what else to say there. If you haven't been making any money in the markets, then I highly recommend again that you try and learn some type of investment process that allows you to not get distracted by all the noise that's out there. All right. With that, though, we'll go ahead and take some questions. We have about 3 minutes left till the market closes, and so yeah, let's go ahead and take a look here. Man, take a look at Ethereum. Ethereum just keeps on going crazy. If you guys aren't tracking the ETF flows, just the other day, we had Ethereum ETF flows see the largest daily inflow since it launched. So this is huge. Pretty exciting stuff there. Let's see. Yeah, and then in terms of which sector within the cryptocurrency space is doing the best, right now it is DeFi tokens. So a lot of those newer decentralized finance tokens, as well as some of the OGs like Chainlink, Ethereum, those names, they've been doing very well. Hopefully you were able to pick some up on discount there. All right, what's up, everyone? How we doing? Dollar, still struggling. It remains neutral in our model, though, so we'll see what happens with the dollar. Seth William Anderson, how are you positioning portfolios to be prepared for stagflationary environments? Well, I mean, some of the best. Great question, by the way. Appreciate that question. Really, the best things that perform well are things that end up doing well in stagflationary environments, such as gold, things like Bitcoin. You can still do well in some of the main equity markets, which is why like the mega caps have continued to do well. They themselves are being positioned as inflation hedges, right? So yeah, a lot of these mega cap names, they've been performing incredible, and it's quite insane seeing these huge mega cap companies move the way that they're doing. I mean, it's quite incredible right now. So yeah, I mean, there's nothing really stopping these big tech names from continuing higher. So yeah, I mean, it's like why fight it? For people out there that are trying to like call tops and like short the market when it's doing these types of patterns, why? I really don't understand it. One of the big rules that my team and I like to follow is never, ever, ever short something that's in a bullish trend. You might get lucky sometimes, but man, you are playing with fire if you're trying to short stuff that is in bullish trend. And most of the time, I'm sure if you've tried doing that and your experience has been not so great for the majority of the time that you do that. So yeah, don't short bullish trends. Only short bearish trends when they make a pump. Yeah, so interestingly as well, we have the yield curve also accelerating here, signaling that we're still in a more stimulative type of environment, mostly because this is mainly from the government just issuing tons of debt at the short end of the curve. And it doesn't look like that's stopping anytime soon. When it does stop, of course, that's going to be a bad hangover. Excuse me, but that could be for quite some time. All right, let's go to some questions here. What's up, TikTok? What's up, Instagram? How we doing? Fed cuts now equals bull steepening. Gold goes higher. Thoughts? BTB Analytics, completely agree. You are right on track there, my friend. Bull steepening, definitely. And that's what we're seeing right now, actually. Wizar, appreciate the helpful and appreciative comment there. All right, cool. Any thoughts on some of the EVTOL companies, Archer? I'm not sure what those are. What do you mean by EVTOL? I'm unfamiliar. Remember, I'm a macro guy, not a micro guy. You're going to have to educate me on some of these things. Oh, you're talking about like environmentally friendly means of transportation? Yeah, I mean, something like Archer in our model, this is something that's not bullish trend. So, definitely wouldn't be buying that. Let's take a look at some of these other ones. Now, this is a different looking chart. This is definitely more of a bullish chart here. JOBY. I don't know anything about this company though. So, I mean, yeah, let's see. Okay, like all electric. The thing that I don't like about electric planes is that I don't know, they seem just very, I don't know, like what if you run out of battery mid-flight or something, you know? I guess you could do the same thing for gas, but I feel like over time, like gasoline, there's pretty much like a steady state of how gasoline gets consumed, unless you have like a leak in the tank. Whereas with batteries over time, they have like a life to them. And so, the older a vehicle may be, it may not have as much of a charge as before, right? So, I mean, and of course, I'm not an expert on that, but that's just from my own intuition. We'll see what happens there. But yeah, I mean, if I had to choose between a gas or an electric plane, I'd probably choose the gasoline powered one. Electric vertical and landing. Okay, that's interesting. Who knows? I mean, maybe there's a market for that for like short term flights or something, Who knows? How much do you think the Fed will cut next month? I'm not sure yet. I mean, the market is suggesting by 25 points. We'll see. I mean, there's still a lot of data that has to come out between now and then. Technically, you did have an accelerating inflation print when you're looking at core inflation above expectations. So it really just depends on. I think the Fed is going to have to change its messaging, right? Because, the majority of inflation that we just got, that was from services, right? It wasn't from things like tariffs. So very interesting there. What's your take on a sector that will do well in the current climate? Well, I mean, it's the ones that have been in a bullish trend so far. I mean, when you take a look at it, you have tech, financials, consumer discretionary, communications, staples, and utilities. I mean, utilities is really one of the best ones that I don't hear too many people talk about. But take a look at the bull market in the utilities sector, right? Pretty good right there. Same thing, obviously, with tech. Financials doesn't look as good as tech or utilities. Consumer discretionary looks pretty good. Still not as good as tech or utilities. Communications looks really good. And then staples, not as much. So, I mean, the top three would be utilities, communications, and tech. Right. And we could see just another reacceleration here. The problem with all this, though, is that it's going to potentially keep the long end of the curve elevated. So we'll see what happens there, too. Had a decent jump in the 30-year U.S. government bond yield today. Excuse me. But yeah, interesting stuff there. Let's see. Could there be a bubble within some of the AI quantum companies, for instance, Palantir, JBL? Possibly. The only problem is that, people are just stuck in the old playbook where they start with like multiples and valuation of companies when that has not been the playbook in this post-pandemic extra $4 trillion in stimulus from the COVID crash environment. Okay. If you're starting with valuation, you're going to be left on the sidelines because you think everything is incredibly expensive. And in turn, you're missing out on a clear bull market. So don't do that. Prioritize the trend. Ricky says, should I keep my money in the stock market? That's up to your decision. All I can say is that the market remains in bullish trend. All right. Well, pretty short report today, ladies and gentlemen. Running Grain 123 says, I joined late. What did I miss? Just watch my recent video. We basically just covered that. But yeah, I mean, the main message for this video as well was like, if you're struggling with like trying to determine what to be in the markets, just look at the bullish trends. Thanks. I'm still holding on all AI. I don't recommend that either. A hyper concentrated portfolio is subject to massive volatility. So you're basically gambling. Thoughts on Trump getting rid of BLS guy? You mean the woman? Or was it a guy? I thought it was a woman. It doesn't really matter, but either case, I mean, yeah, there's something to be said about the way that they might be collecting data. We'll see, but yeah, I mean, those revisions are pretty bad. Jack Hammer says, record in YouTube. We are. Jack Hammer, if you go to our YouTube page, this stream right now is happening on YouTube as well as Instagram, and you can view the charts that I have in front of me. Just go to our YouTube page. But all right, everyone, we'll go ahead and wrap it up there. I appreciate everyone for joining. As always, if you guys would like to check out some free resources, we have the Daily Index Ranges free newsletter, where we send you the daily trends as well as trading ranges for the SPY, QQQs, and IWM, right? The S&P 500, the NASDAQ, and the Russell 2000 small caps. And that'll give you a pretty good idea of how our process works. It's for free. And a lot of people who even trade options say that they like it a lot. Lots of people have already subscribed, so I appreciate everyone for joining it so far. But yeah, that's a great place to get started. But as always, appreciate everyone for joining. Good luck out there, and we'll catch you tomorrow. Bye.